you don't put much stock into this story that the president thought about trying to demote the Fed chair about 6 months ago?
I'm sure he has evaluated it. He probably had his staff brief him. What can I do? I appointed the guy. Can I demote him? And I'm sure the answer came back, you can't. It doesn't work that way. Now, I've said this before. I am willing to bet my home on the fact he will not reappoint Jay Powell in February 2022. That's a given. If you take that as a given and you're Jay Powell, and this is a dear friend of mine, but I'm just assuming this because I know him so well. He hasn't said anything. What does it tell you to do? You do what's right, because you're only going to be there for a total of 4 years. And you're not going to give in to political pressure or whims or what the market's asking you to do. You'll do what's right in order to ensure your legacy for the real economy. So I think it just emboldens the Fed. It emboldens Jay Powell. He's comfortable in his own skin. I know this man well. And he can't get rid of him. But
and you fully intend Powell to serve out the remainder of his term in full?
He said it yesterday. I expect him to. I don't think anybody's going to push him off the ledge. He's comfortable in his own skin. I'm very fond of this man because I know how comfortable he is with himself, and he's not arrogant, and he's not competitive in this sense, in a political sense. So I do expect him, but I don't expect he'll be reappointed. I don't think the president wants him, and that's his chance to move him away. And then I don't think he'll stay on the Board of Governors after that.
Who would make sense to be the next chair of the Fed?
Rick Santelli. What do you think?
Rick will get a kick out of you saying that. Let me go to it. Let me seriously.
No idea. No idea. Obviously, I think it's another important point. Whoever he wants to be chairman, or whoever he points to the board, and we've seen this recently, has to be confirmed by the United States Senate. That's where the power is. So it can't be some yahoo. It's got to be somebody who is acceptable to the United States Senate, particularly to the moderates in the Republican side, and also have some Democratic support. So it's not going to be an easy reappointment. We'll have to see. And remember, Powell was supported by both sides.
Mm-hmm. Kevin Warsh, people like that, Neil Kashkari, would they?
I know. I think some of the names that are being mentioned, of course, would like to have this. By the way, Kevin's no longer at the Board of Governors. Neil is a bank president. You never know. That may have could have affected the way he voted, if he voted for a rate cut, or plotted his dot, rather, not voted.
Sure.
So you'd have to back out those that you think are ambitious to get this job, who've been almost campaigning for it. Does that dot that's been plotted by that individual or those individuals make sense? I don't think so. So, we'll have to see, but that's all speculation. We have until 2022 in February, and I expect Jay Powell and the committee to do what's right going forward.
Yeah, Richard, I appreciate the time, and I certainly appreciate you sticking around through our breaking news and doing us that favor. We'll talk to you again soon. That's Richard Fisher.
It was worth it to hear the president talk about North America in that way. That's a big step forward.
We'll talk to you again soon. Rick Santelli, I'm sure, sends his regards. I'm going to get back to another Rick, and that's Rieder, who was telling us earlier, Rick, that you thought bond yields were poised to go lower. How low do you think they'll go?
So, it depends on the part of the curve. I mean, we've talked about on your show for a long time. The front end of the yield curve was attractive, and there was an asymmetric dynamic in terms of the front end, that if the Fed wasn't going to raise rates, and if the Fed moved, you actually have upside in terms of, or downside in terms of yields, in terms of where the front end would go. I actually don't think, pricing in, the front end's now pricing in 80 basis points cuts for this year. That's aggressive. So, but I could see a dynamic where the 10-year, I think I said a couple of days ago on their CNBC.com, that I think the 10-year can get down to 180. I think there's a demand for yield in the world, and I think there's one thing that's really important for the Fed and for investors to think about. We live in a global monetary policy world. We live in a global investment world. What Mario Draghi said earlier this week lifted the bar for every central bank around the world, including the Fed, and where European rates are going and where other, including emerging market rates, are going is where the Fed could potentially move a bit more. So we like, for the first time in a while, you actually, taking off some of the short end and maybe a bit longer on the curve, maybe into the 10-year.
Interesting thoughts. Joe Terranova has a question for you, Rick.
Rick, that's an excellent point on the rest of the world, and it does put the pressure on Chairman Powell. But I think when you're looking at the world and looking at the collective global negative yield debt that is out there right now, we know that as it accelerated significantly since the fall, at a certain point, how do you arrest that growth in negative yielding debt?
So, man, I've been pretty aggressive about. I think the ECB has to, when they talk about opening the toolkit of quantitative easing, you have to get at the part of the capital structure that is priced wrong today, or the fact that equity is not is too cheap. Somebody made a comment in one of our meetings today that you buy bonds in Europe for upside and you buy equities for carry because you pay big dividend yields in equities. It is the most distorted dynamic I've ever seen. I do think that the ECB, you have to create aggregate demand, you have to create consumption, and bringing rates further negative. I thought the point on banks and what it does to net interest margin is profound. Bringing rates more negative, I don't think does it. Providing a bit more liquidity to the system through quantitative easing, but I think you have to think about where the capital stack is. And where rates are today is to get more negative is not helping velocity in the system.
I'm going to let you go, but lastly, your gut tell you if you get a cut in July, and if so,
yes.
by how much?
So I think they're going to go. So you assume where we are, and you don't get, you get a moderate trade deal, and you still have some weakness. I think in terms of supply chains, et cetera, I think you can get 50.